Hello and welcome to the very first episode of our special webinar series on building for the future, which we are hosting in association with Lyxel&Flamingo. Um, the fintech landscape across the world has been witnessing exponential growth owing to the increasing number of startups coming up. And I think one cannot ignore the significant contribution of Indian startups in this very space. We are seeing a very paradigm shift in the manner in which financial services and products are being consumed by the Indian market. So from increased access to smartphones to the rising need for efficient financial services, the Indian market is at the forefront of a fintech revolution. In today's panel discussion presented by Lyxel&Flamingo, we, along with our industry experts, aim to dive deep to understand this changing landscape of fintech and the trends that will shape its future in India. So now let me quickly welcome our guests. Uh, Mukund Rao, he's the co-founder of Movin. He's our first guest. Thank you for joining us, Mukund.
Yep, great to meet you guys. Thank you.
Satvik Vishwanath is the co-founder and CEO of Uno Coin. Welcome, Satvik.
Thank you. Thank you.
Next is Vipul Sharma. He's the founder and CEO of checkbook.com. Welcome, Vipul, to the webinar.
Hi, thanks. Glad to be here.
Last but not the least, let's welcome Dev Batra. He's the co-founder and CEO of Lyxel&Flamingo. Thank you, Dev, for enabling this. Welcome.
Thank you so much, Rahul. Thanks a lot. And thanks everyone for joining us.
Yep, thanks, Dave.
Guys, I'm Rahul Puri, founder and editor of Agency Reporter. So let's just begin quickly. Satvik, my first question is for you. Satvik, fintech has taken center stage in the last few years. And according to you, what all factors exactly are responsible for, especially fintech solutions and startups, to be able to penetrate the Indian market deeply and rapidly?
So I have to first start with the young age of Indians, right? So we are one of the youngest countries if you see the average age of a citizen, if you compare with other countries. And combined with that, we have the great mobile phone and internet penetration because of Geo. So that is actually putting the device in nook and corners, very remotest areas of India. So once they have the smartphone and the required internet access, while they started with, say, WhatsApp or any other thing like social media applications, they obviously, as they get more familiar with usage of the device, they have also explored themselves into looking at the options of Paytm and many other wallets. It could be Google Pay or a few things. So I combined with this, I also think there is a very decent amount of population in India who don't have direct banking access because of again the distance. Like there are banks which don't want to go and serve in some of the remote places because they won't be able to earn their living for that particular branch. So in that way, they are a little bit left out, and they obviously are using the digital banks facilities or digital wallets. So all of that combined is bringing in a lot of new users, people whom we have never heard of, into this particular category. And now comes once the money transactions, how we have to send out the money and how we have to receive the money. Well, once these things get sorted out, then becomes okay. Then what are the other different applications we'll be able to use, right? So yeah, all of that is just going good.
Thank you, Satvik. Dave, currently fintech in India has more than 2,100 players. How will the brand survive this competition?
Yeah. So that's actually interesting where the marketing bit also kind of comes in and understanding what the product market fit is all about. The way I'm looking at it, the more I'm reading, it's, that obviously what matters is, what you have from a product and service proposition standpoint. How do they stand out and how relevant they are to the new age audiences? Because there's some very interesting research pieces I was reading about, there's research that Cushman Wakefield had done. And, there's obviously, I think it's a little exaggerated, but it says that in 5 years from now, 33% millennials and Gen Z believe that there won't be any banks. So the fact is now, at least the way people perceive banks, the way people perceive fintech, the way people perceive the use of finances and funds, etc., it's all moving away from a physical establishment, going to a certain place which has a certain way of communicating with you, and to a very new realm altogether. So people who will understand this better are the ones who will probably be able to adapt to the realities and maybe win faster. Because obviously, as at the end of the day, we need a certain amount of captive size of audiences to be able to grow a prosperous business. So I think people who will understand that better would work better. And maybe at some level, how do you catch them early? And how do you grow with them over a period of time? How do you keep enhancing life cycles as your audiences start enhancing? Because the attitudes of Gen Z and millennials are very different. So I think that would also make a huge impact on the winning apps, essentially, in my opinion. So that's one component of fintech that from when I'm thinking about a super app kind of a fintech, I think those things will matter a lot more. That's my point of view.
Makes sense, Dave. Let's move on to Vipul. Vipul, the pandemic also has put the spotlight on personal finance. Which trends have dominated the personal finance space in the last 3 years? As Indians experimented with digital offerings.
Yeah, so I think the space that I'm in, which is sort of small business owners, usually sole proprietorships, have also obviously scaled tremendously during the pandemic, just like every other function. Kind of agree with Satvik and Dave that India is going towards essentially a branchless environment. The banking and fintech, and especially right. What people have realized is that the phone is essentially the device which connects you, and obviously because of Paytm, Google Pay, and so on and so forth, PhonePe, you've already got customers who've managed to start doing very basic UPI transactions seamlessly. We're the largest in terms of digital payments globally now. So from that point of view, I think India's ready, right? And during the pandemic, obviously branches were shut. Everything was shut, right? So you couldn't go and actually transact. All in a lot of places, people weren't allowed to go. So you had to resort to getting stuff digital. So loans have gone up like crazy, right? The demand for those have gone up like crazy. Insurance as well has gone up a lot because people are buying it digitally because they can and they have to. You couldn't have all those agents coming to your office or home and explaining products and so on and so forth. You have to buy it digitally, and that's what everybody's empowering, including us. And similarly, when it comes to accounts, RBI has been really great at it, right? So they've allowed, for example, video KYC for proprietorship accounts in small business owners for current accounts for the first time. And those are all welcome moves. And there's obviously, there's a white paper from Niti Aayog, and I was on a panel with Niti Aayog a couple of days back, and we were discussing setting up a digital bank construct in India, which doesn't need any branches. So I think those are, so the regulator has seen the impact and believes that the country is ready. The customers have seen that they can do a lot more without having to waste their time and not have to, in our case, for example, our customers don't have to go from their shop to go to a branch and get stuff done. They can get it done on our app. So I think all those things have really accelerated how fintech is going to scale up. So.
Thank you, Vipul, for touching upon the subject of neo-banking. Mukund, you want to deep dive into it, and just can you please explain us how exactly neo-banking works and how is it different from traditional banking? This is a very generic and basic question, but all of us need to understand, since we are in the space of fintech and talking about being really futuristic, we need to understand how neo-banking works.
Sure. Okay. So a neobank is basically a bank that is branchless, as Vipul said, primarily operates, in a digitally native world, accessed via, a website or a mobile app. And they basically don't have any branches. Now, if you look at a neobank construct in the context of India today, all neobanks that exist in India today that started, probably back in 2020, I think with Open was probably the first one that actually did something in the neobanking space. All neobanks have to rely on the infrastructure of an underlying bank. So neobanks today in India are purely, I would say, we generate a service layer above the traditional banking services offered by banks. and bring about a very differentiated experience to the customers that we serve. So, for example, if you look at what Whipple does in his company, or what Movin is doing, or what Jupiter is doing, we're all serving the needs of a very, very, I would say, underbanked segment or a pre-banked segment, right? So there's a very strong use case, especially within India, where I think, given the fact that the large pockets of population in India today have very diverse needs, and banks are not able to scale to meet those needs, is where they're realizing that, instead of doing it on their own, let's partner with somebody, who can actually deliver that kind of a service much more faster. And that's where neobanks fit in, right? So neobanks are able to, I think, do a couple of things. One is, neobanks are able to understand needs of a customer at a very, very minute level, right? Which also means that neobanks typically will tend to become very focused on certain customer segments rather than becoming broad-based, as any private or public sector bank is today. Number one. Number two is the extensive use of technology that neobanks use, AI, machine learning, data analytics, to really drive a very personalized experience to that user, right? So I'll tell you a classic case. So today, for example, in my family, my mom, me, and my son, we all use one mobile app. Whatever, we bank with one banking partner, and all our mobile apps are absolutely the same. The mobile app doesn't know that the needs that I have today is very different from what my mom has, or what my son has, right? And that's where neobanks step in. So neobanks step in to basically say, hey, one size doesn't fit all. Let's offer something that's very unique to our, the customer base we're trying to serve. And I think the smart thing that has happened in India is banks have caught on to this very quickly. If you look at the likes of a Federal Bank, a State Bank of Mauritius, all like an RBL, they've all seen exponential growth over the last 12 to 24 months, purely because of the fact that they have enabled their banking rails to be accessed, via APIs with multiple neobanks have partnered with, and I've just seen rapid growth, right? And that has enabled actually many of these banks to achieve scale at a much faster level. So it's actually becoming a win-win situation. I think we are at a point today in India where I think, neobank has not even seen its peak. I think we're just at the beginning of the curve. There's obviously trust factors, other things that have to get developed over a period of time. But I think over the next 2 or 3 years, I think India will be in a state where neobanks that are firmly established in India will offer something that's absolutely, wow, as an experience to its users. So I think that's really is my take on neobanks from an India perspective.
Really buy that one, Mukund. People, there are too many fintech startups that are coming up. I'm seeing almost 2 or 3 coming up every month. And because of this, traditional banking system is kind of witnessing a very, you will say, disruption at a rapid pace. Okay. Do you think it is because the consumer pain points are better, as Mukund highlighted? Consumer pain points are better addressed by not just new banking system, but the innovative technologies that all these fintech startups are adapting, or are there some other factors at play that are responsible for this disruption?
Look, I think, if you look at the US, right, they have, about 10,000 fintechs, right? And they're like, their stock market is at what, 32, 33 trillion dollars, right? We are 2,000 fintechs. Our stock market is about 3 trillion. I think we crossed the UK yesterday. So that was a cause for celebration. So, the fact is that, as you go along, per capita income goes up, and it will over the next couple of years. And as we get to a, $3-5 trillion economy, you'll also have a lot of segment specific, neobanks which will come up. And on the fintech space as well. So there are multiple sides to the entire fintech industry. And I think, like Mukund was saying, right, a lot of it is going to be in partnerships. And it's all win-win. Like if you took the example of SBM or Federal Bank or Equitas and so on and so forth, RBL, they've all gained from the customer acquisition. The fintechs have gained because they've been able to work on specific use cases, which maybe the banks can't work on it because they are universal and they are serving all segments. And the customers are gained because they're getting access to far better technology, far simpler processes. And I think that's how the whole ecosystem evolves and becomes way better. So I think in terms of the overall next couple of years, I think, like Mukund was saying, it's still really early days in the overall fintech space in India. I still see a lot of pain points. For example, loan originating systems in India are literally the same as they were 10 years ago when I was in HDFC Bank. So there's a lot of stuff that needs to happen over there. A lot of the APIs in the banking industry can be a lot better, or the insurance industry, or mutual funds and so on and so forth can be a lot better. I think they will get better over time because they start working closely with fintechs who are far more tech nimble and can obviously do and come up with better solutions because just the younger engineers, the younger product managers, they're all super gung-ho about questioning status quo. And I think that really helps the overall ecosystem. And the great thing is that whichever banks or people that we work with are happy to be questioned on the status quo. They will have back and forth and they'll worry about compliance, which is absolutely critical. But as long as it is within the compliance ambit, they're open to looking at better solutions. I think that's how the overall ecosystem becomes better and customers benefit at the end of the day. Yeah.
Thanks, Vipul. Almost every time we have these kind of problems, we have solutions coming up, and we have better solutions each time, every time. But Dave, what are the expectations of Gen Z from this FinTech revolution? We have spoken about how neobanking or how these startups are taking consumers really seriously, but we haven't spoken about what the other side. What exactly are their expectations first of all?
So see, before even I get there, because that's a very important question, I do believe that a step back is when we talk about building for the future, right? So let's say we can't imagine too far out anymore because technology changes really quickly. But even if I was to imagine things 3 years from now and 5 years from now, Gen Z will become a very important stakeholder in the entire storytelling of, in the entire consumer cycle. They will have more money. A lot of research says that Gen Z are far more savvy about saving and investments. The equity exposure of Gen Z is increasing quite a bit. I was reading a report, and maybe Satvik here can confirm that, but I think this was WazirX or one of those people, one of the exchanges that talked about the fact that more than 50% of cryptocurrency owners in India are people less than 28 years of age. So the fact is that suddenly there's this huge change that is happening. There are massive forces of disruption that are coming in. And before I can even answer about the demography, because that's really a very important component, the thing is that we are discussing three components of forces of disruption. One is where the transactions of fintech will happen. So bank, will it happen in the bank? Will it happen in the two-dimensional screen? Or will it happen in an immersive metaverse? How will that change? Will gamification come in? So that's like one force of disruption. And I'm thinking, keeping in mind the attitudes of Gen Z that is coming and how they like to interact with various interfaces. The second is who's my audience and what are their priorities. When I'm also thinking about millennials, the younger and the mid-age millennials who now have enough money. They've started buying homes. They have kids going to school. They've started thinking about insurances and savings, and also how will we become relevant 3 to 5 years from now in that, and what currency are they going to use? Because that's where I want to understand. While we're talking fintech, but we're still talking fiat money, and how when we start thinking about Gen Z, should we think about crypto also? Should we think about what kind of coins will come in? What will they trade in? All of those things will also come in. So I'm really, before we can answer demography, I think I just want to understand how these disruptive forces also come in. And what is the view of other panelists here with respect to these items?
I think you touched upon a very important point, Dave, about the voice of Gen Z. I think I was reading somewhere, one of the VC funds in the US had put out a kind of a note. And they're saying, today, if you look at stock price movements, a lot of it is controlled, obviously, by the large private equity funds or large institutional investors, right? Ups and downs of movements. And they're saying that going forward, because of the rise of of investor interest, and for example, if a company went and did something that was climate unfriendly, for example, right? Yes. Because of the social power today that Gen Z have with them, it's quite likely that tomorrow's stock prices will be impacted by just the voice of a customer. right? And not really
Absolutely.
related to fundamentals, just basically. So I think the power of Gen Z is will start to get unlocked in multiple dimensions. I mean, I think I think in India as well, people are waking up to the reality. I mean, I know they're a really old school company, but Life Insurance Corporation, if you look at some of the recent ads, all the ads are talking to that 21-year-old who's coming out of college and say, what are they going to do with the first paycheck that they get? And everybody talks of getting, a term life insurance policy. So even traditionally, I would say legacy companies or financial institutions are understanding that, where am I going to get my headroom in terms of growth from? And that's all going to come from this population, right? Who are really young, eager. I mean, the explosion of demat accounts in India, I think, has also been, a testimony to the
It's
fact,
growing
right?
a crazy. Yeah, that's right. And in fact, I was also reading one more study around the fact that when you look at Gen Zs today, the amount of money that they have started saving is far higher than millennials or even Gen X at this stage in their life. So the fact is, the way I also see that, the traditional focus on baby boomers and all doesn't apply to India in that way. But, I look at millennials as a lot like baby boomers in the US, because millennials is actually the first generation that actually came with some sense of having prosperity and taking their family away from just being a very regular middle class family to someone who's more prosperous. And Gen Z is a generation after that also. So it's quite interesting to see how they want to be away from debt. A lot of millennials, when they started working, access to credit also probably got a lot of them with they started with bad credit scores also, because for them money was coming as debt for the first time. But Gen Z is probably a lot more careful about it. So I just want to understand, maybe some of these attitudes also might have a big impact on what kind of products and what kind of conversations we need to have with the Gen Z folks in future.
I think interesting conversation that we are having, and we're talking about Gen Z. We spoke about cryptocurrency. Satvik, you want to talk more about cryptocurrencies here, or the overall role here, and how Gen Z and cryptocurrency gel with each other? What do they do? I mean, let's just talk about the current scenario surrounding cryptocurrency in India.
So like I was explaining, the average age of our customer is about 28.8 years, right? So that essentially means at least half of them are below that particular age. That's what it means. And if you also, I mean, these people are also not generally rich in nature, because they would have started their careers within the last 5 years. Maybe they are engineers or whatever profession they have chosen. But why they are still looking at cryptocurrencies as one of the portfolio diversification of our investments is because they understand, okay, like world is slowly moving towards digital technology, and they know how to use mobile phones, internet penetration, and mobile phone penetration, like I was saying. And then they also look at these things as the digital gold, right? So India is one of the places where people come with saving mentality. I mean, people don't prefer to live on credit like US, right? So then at the end of the month, they pay the credit card. But here it is more inclined towards having the money and then spending it. And a part of money is always saved, because it's kind of saving mentality. And adding to that, that's pretty much right. The education wise, or if you see that technology wise, people actually push themselves to learn new things, right? So especially when it comes to the younger generation people. And cryptocurrency obviously is one of the challenging subjects if they actually want to learn about it. I mean, if they just want to invest and take the bet, it's a different game altogether. But however, if they want to take a deep dive, then there is decent number of weeks and months that is required for them to understand how different pieces of the entire, it could be blockchain ecosystem, or it could be the game theory that is working, or it could be like what kind of news affects the prices in what ways. These are all like the various things that they will eventually have to learn before they can easily navigate. And it's always comes with the highest risk, and still the youngsters are looking into this, and they actually are looking the advantage to be like decentralization, right? So the more, for example, internet is decentralized today. So that works differently than many other centralized services like Google or something like that, right? So in that way, if you compare, as people look at the decentralized governance or decentralized mechanism of doing the transfer of the money, etc., they definitely are pushing themselves and taking the bet. And on the other side, people also understand that over a period of time, like how the borders of the countries mean nothing when it comes to message transfers. eventually the borders of the country will not mean anything when it comes for financial transfers also one or the other day in the future. So as the world is coming closer, they all believe that it's going to be 5 years or 10 years or 20 years down the lane. The kind of world that we will look at and the kind of transaction that will happen is more friendlier to cryptocurrencies than other forms of other investments or other things we have seen. So yeah, this kind of the view that I have, and this has been my view since like 8 years since we started Unocoin already, and it has never changed. So we are actually seeing that to be more in action nowadays since say 2 years.
Fair point, and I think we really need to see some changes at the exchanges as well. That's what Satvik was talking about. Vipul, my original question to you was whether the Indian finance space is ready for specialized fintech offerings. But I'm changing it a bit now, and I wanted to ask you now: is it as per expectations? The entire fintech offerings, specialized fintech offerings, and the super app revolution that is happening, is it going as per expectations?
Look, I think I'm not a big believer in the super app concept, right? In my view, the mobile phone is the super app. So you will have, but within a particular category, customers want one single app which can do stuff for them. So do I see a situation where there'll be one app where you do everything and you don't have any other app on your phone? I mean, can you imagine that for yourselves? Highly unlikely, right? But so I'm not a big believer in the super app construct. But I think in the financial services space, you do have pockets of services that a specific segment wants, and those services are what I think specific fintechs and neobanks will start providing. Like for example, in our case, my target segment is like a sole proprietorship under 40 lakhs of turnover, right? Like a kirana store, a hardware store, right? So I'm not in the private limited space like a bank open, a Razorpay, etc. And that customer actually wants, accounts, lending, insurance. These are three things that he wants. We have all three, and we call it our sort of three engines of growth. It all plays in together. The customer has an account, he can get lending on top of that, or if he wants it separately, he can get it. You can buy insurance, insure a shop, and so on and so forth. And then, of course, we have sort of other services like we have something called Checkbook Khata, which is like Khata Book, which is a service inside it if he wants to track his cash stuff. We have rewards in it, etc. So for that customer, his primary needs of ensuring that he doesn't have to walk to a branch. A lot of my customers still bank with cooperative banks, and they have to actually go to a branch to deposit cash or bank a check, which is so last century that is unbelievable. I mean, even all of us don't do that anymore, right? As salaried customers. So that is the evolution that is really important. Having segmental products, and over there we are barely able to keep up with demand. Lending's insurance has been growing 50% month on month. Lending's growing 25-30% month on month. So I think from that point of view, the demand is huge. Most of these are blue oceans. For example, even the teen space that Mukund is in, for example, the under 18 or kids and so on and so forth. I think again, are unrepresented completely. Same with our space. Banks have traditionally been very happy with salaried customers. They've been very happy with corporates, mid-market, SME, private limited companies with turnover more than 5-10 crores. They want to go meet them. And that works. But for every other segment, we don't have segmental stuff, segmental neobanks. I mean, if you look at manufacturing, there really isn't anything for manufacturing the way it should be, in my opinion. And then we find that within our segment, chemists want something else, hardware stores want something else, paint shops want something else. Each of them are ecosystems and rabbit holes in themselves. So that's another point of view. So the scale and the scope is tremendous. And these are big segments, 7-8 crore small business owners in India alone. who have a turnover less than 40 lakhs. So it's a huge segment, undertapped, and similar is the space for every other segment that you look at. Almost the size of the Indian salaried customer market that banks have been tapping for the last 50 years now. Yeah.
Point of view, interesting. Dave, I'm coming to you and wanted to understand how will the communication approach of these fintech, companies will change as the new generation takes over.
Yeah, that's a great question. In fact, I was just thinking about it because the kind of audience profiles that, for example, Mukund is talking about, or Satvik's talking about, or even Vipul is talking about, they are in the same India, but they are in some ways quite different also from each other. Nowadays, if you look at a lot of fintech companies and even some of the Instagram handles of Kotak services, etc., you'll see that the language is not very stiff upper lip kind language. It's not very professional. It's not very business speak. You see a lot of meme marketing happening. You would never think a serious category like finance would ever move to that space where people can have a very relaxed, informal communication style and still be able to build trust, because it was seen as something that will never be able to, will make you look frivolous. But that's changing in a very, very big way. The intent now for most of these banking, the new age banking, the neo banking kind of opportunities is mostly around building education, telling people how to use their money, how to be more savvy about savings and, spending and everything. So I do believe that communication style is going to massively evolve. Plus, where you're communicating might also change in a very big way. In the sense that I do believe that over a period of time, like Gen Z are digital natives. Again, a lot of Gen Z are born after Amazon, so for them, Amazon is predating them also. So that's the kind of economy that they are being born and raised in. So in that sense, a lot of them are, maybe, I don't know, it does look like that metaverse might become a slightly more serious thing than just being a fad. Immersive experiences, virtual experiences might become very critical, and meeting your consumers in that meta world might be an important thing to look into. Maybe not, it doesn't look like a very immediate thing right now, but maybe in about 3 to 5 years that might also change. But where I'm really trying to understand, maybe Vipul can offer more light there, is in terms of how their communication happens with their audiences, because it does seem like it's a different cohort of audience. How does that communication work? What is the kind of communication that has worked for them in the past? If they've done some kind of experiments, I think would be a very interesting thing for us to learn. Vipul?
Yeah. So I think, so what we've seen is that in our customer category, so imagine a shop, right, in a part of the city, right? It could be Gurgaon, it could be Delhi. What you usually have is there's this galla, which is the front of the shop, where you usually have a dad or a father or older person sitting. And then you have this younger, son, a daughter, and usually it's a son though, who's 21, 22, 23 years old. He's married, has kids a lot of times that we speak to them. And he's the one who's setting up everything. He's the one who's setting up the POS machine. He's the one who's setting up UPI. He's the one who's buying Bitcoins as well at times, and then, because he's seen a WhatsApp forward or a meme. I've done memes on my LinkedIn posts, and they resonate. And then he's the one. So they are really savvy. They want to get the best for their family, and they're the ones to whom the older generation goes back to and says, "Acha, this is happening. Kya karna hai?" So they're the ones who are saying, "Okay, don't worry about it. I'll set it up." Right? And I think that's where they're the ones who are getting their Aadhaar cards sorted out, the GST sorted out. Right? So I think that's the world in which my customers are in. They like short form, video, because in fact, we did a research some time back when TikTok was still in India, that a lot of those customers, a lot of these small business owners running your kirana stores and small restaurants, they actually watch a lot of TikTok. And now they're on, MX and, Takadak and all of that, because they are in a space where they can't, start getting into a longer form video because they have to be available. So they'll see, they'll keep scrolling through, and if some customer comes in or there's a query, they just, keep it down and get into the business, right? So that's something that's really worked. And then, of course, there's another construct that they also want to be spoken to. They want to get that feeling. So one of the things we did, for example, our current account is in 7 languages because we realized that makes them feel respected. And why we did that is because when we went to the market, we realized that a lot of people, especially the older folks who actually control the bank account, they actually they can't understand what is there on the entire app. They don't know that. So what they've done is the younger kid has shown them, you click here, then you click here, then you get an OTP, you put it here, then you submit, right? And that's it. That's all they know. So if the app changes the layout, or there's a new process, or there's a new login process, they're lost. They're like, "Kahan gaya wo app?" So we made it in multiple languages, and that really helps them feel respected because they're like, okay, now I can understand this. I can get it. And local language videos help. We have call support in multiple languages. So we have a center in Bangalore. We have one here, South and North. And when we talk to customers in their own language and take them through a sophisticated product, where they can literally get an insurance policy in a couple of minutes, or loan in a couple of minutes, or open their account in a couple of minutes, it's very empowering for them. Because their usual response or the usual interaction with banks and financial services is where they literally have to go and stand and, imagine a Kirana store owner walking into a foreign bank branch, right? He's not going to get anybody talking to him. And I think that is the construct of the messaging that we give, that, hey, we respect you. We're there in your language. We've made it really simple. And we understand you don't have time, so we'll make it really short and simple for you to get it. I think that works, in this segment really well. And I'm sure everywhere else as well. The attention spans are so small now. You have to get the message in. I'm sure Mukund is dealing with the shortest attention span category.
Yes, absolutely. Tell me about it. So, the other day I got a video ad from my, I was looking at a video ad that we had done. It was 1 minute long. And I said, dude, 1 minute is not going to cut it. That's like 45 seconds over the limit, So we really are, it's getting shorter and shorter. Immediate access, it's just a real problem. Yeah, I think it's a problem becoming with adults as well, right? And I think this is all driven by OTT, right? This habit of skipping through, something that you don't like, jumping segments. Yeah. I think adults also are falling into that trap where we are also losing our attention span, I think, to a large extent. So I think it's going to become a universal problem.
Yeah, I think mostly it's also a little bit. Sorry, go ahead.
No, sure, Dave. You can go ahead. No, it's a free-flowing discussion. I'm really liking it. Let it go back only. Yeah, you were saying something.
Right. No, I was saying that somehow it's also increasing the narrative around the storytelling. So how are you saying and who's saying it for you? That is also becoming important. And I'm talking mostly from a marketing context right now. So the fact is that I do believe that somehow this generation doesn't necessarily always believe in the power of superstar coming over and telling them what they should buy. The role of brand ambassadors have kind of started going down a bit. It builds in a good upper funnel understanding, your awareness can start improving and all of that, but it doesn't necessarily will influence someone to buy the product. The influence will probably come from word of mouth or someone they can relate to, which is where the rise of nano influencers started happening. Vernac influencers, people who speak in your language only. They may not be very big familiar faces, but people that I can trust. So somewhere I think the way we want to communicate, if at all it is going to be in the long story format, we would need different kinds of storytellers. And because it's all getting so nuanced now, we might need multiple storytellers who can actually narrate our story better for us. And maybe that will hold the attention, or somewhere it is organically fed in, like how the product placements have started happening a lot on OTTs also. So that a product is right there in conversations, and maybe that has a bigger appeal. Like we talked about this particular shoe brand that started selling crazy number of shoes when that particular show had appeared, and all of that. So I'm just trying to understand if as marketeers, or the way you are planning your marketing, you look at the role of influencers and who's communicating your story. as an important feature of your communication itself.
Exactly, Dave. You're talking about the creator economy, where previously I wanted to ask Mukund that how is creator economy, basically how is fintech playing a great role in fueling the creator economy. Mukund, if you can just quickly comment on that, and then I'll move to the closing question because we are almost nearing the end of time.
Sure. I
So,
think the intersection of fintech and the creator economy is actually multitude. First is I think fintechs are actually I think one of the biggest consumers of creators. I mean, look at the amount of stuff today that's happening on YouTube, on Instagram, etc. A lot of people are talking finance. In fact, I think there's a separate category that's come out called finfluencers or something of that sort. I don't know how to say it, but people who are just specifically focused on finance related topics and are got massive fan following on Instagram and YouTube. And we also have this kind of a strange overlap that's happened where well-known personalities, for example, in the comedy space, are also now dishing out financial tips and and advice to youngsters, right? So there is that intersection that's happening. But I think in terms of where fintech will start playing a very significant role in the creator economy, and Dave, you alluded to the metaverse, right? I think going forward, I can definitely imagine a world where a bank tomorrow could potentially start lending against a virtual piece of land you have, in for example, in what's that, Decentraland, right? So that's one of the more famous metaverse platforms that are out there. But products can start getting evolved, for example, tomorrow based on NFTs that you own, or the kind of content that you have access to, or IP rights on, or the land parcels you own on some of these metaverse worlds, right? So I think fintech will start to now embrace that one concept, number one. And number two, I think as Satvik is here as obviously the Bitcoin guru, and I'm nowhere close to him in that space. But I do think that the power of the of decentralized or currency mechanisms will play a large part in this metaverse world, right? And that's where fintechs will start. For example, I was very surprised to know that JP Morgan, in fact, has a very, very strong play in the Bitcoin space. In fact, they are super gung-ho about this whole metaverse concept, and they're preparing themselves for generating products in the future entirely based on digital assets, right? So I think the whole creator economy, especially in the new topics coming up around metaverse, NFTs, etc., I think there is a very, very strong play fintech will have there, and it will be across multiple angles.
Wow.
thanks, Mukund. Thanks for your views. Satvik, let's start with you. We are. This is now the last question. This is for actually everyone. Satvik, we'll start with you. Then Dave, you can answer. Then Vipul, you can come in, and then Mukund, you can come in the same order. So the question is that the while there is well, we have discussed everything good about the fintech industry. I wanted to know some key issues and challenges that the industry is currently facing. Satvik, two key issues or challenges that you can point out.
I mean, I cannot talk on behalf of entire fintech, but anyway, for our industry, it's more about education, educating people. It's been quite challenging. So it takes a lot of the efforts. And every exchange that we have in India have educational portals helping their customers. It's like first challenge. I think the second one will be the regulations, right? So India being one of the highly regulated countries when it comes to the financial transactions, I strongly believe that some kind of regulations or guidelines across the crypto industry will make it more closer to the people, not only for the youngsters, but also for veterans.
Sure. Any key trends that you see happening around, let's say, cryptocurrency industry itself?
Yeah, I mean that's like ever evolving. I think so. Nothing I can point out now. So there is some influence of everything that is happening around the world, including Russia-Ukraine issue, etc. as well. But if you see the overall graph of how it has progressed within the last 5-6 years, we will see that one step at a time it is always improving, and it's more bullish only. And it also is able to take more and more people into it, right? So as of today, we have about say 25 million or so customers from India who are into the cryptocurrency because of the various platforms that we have here. Yeah.
Sure, Satvik. Thank you for. I think 25 million is roundabout right. Dave, you want to talk about the entire fintech industry? You want to highlight a few issues, challenges?
Yeah. So I think from a marketing standpoint, like we're talking about so many players and with so many distinguished offers and in some cases overlapping offerings. I think the fact is that at the end of the day, you'll have to build some kind of differentiations, right, for yourself, and you'll have to create those moats so that your audiences are your audiences, etc. So I think somewhere it might be interesting to see how we're able to do that. How do we build that differentiation? And I believe that learning from what we've seen in D2C or other kinds of businesses, there are two things that probably might address the challenge. One is, how do you build your communities so that people are evangelizing you and talking about you or the kind of services you offer, whether it comes from, even when you look at the cryptocurrency today, there are a lot of evangelists who talk about it, even with the new age fintech, or you're talking about neo banking. You need to build a community where people can take that umbrella. And I think somewhere the other bit is coming from how this entire, when people are talking about investments and money and everything, we're talking about a subscription economy. We're talking about everything to be paid in certain pieces only, and that is what people love now. They're talking about how can credit worthiness come in. How do you check that? Are there better ways to do that? How do you communicate that better? So all of those things might also be interesting things to look at. The entire experience and packaging, which is again a D2C combination only, that what your product is and how personalized it is and how it is packaged has become a very big criteria for choosing a product, and which is where a lot of D2C brands have come in and challenged the legacy brands in a very, very big way. So the same thing is probably going to happen in fintech also, where I think the entire packaging and the experience and communication of that experience might have a very big impact, which is a lot of these things might also change how some of these service offerings and communications might happen in the future.
Absolutely. Mukund, you want to come in now?
Yeah, sure. So I think, look, I mean, Satvik and Dev have covered quite a few points, but I think one thing that I would say and this is more inward looking, I would say from a fintech perspective, is one of the agenda items that fintechs wanted to solve was transparency. And I think, unfortunately, there are a few, I think, cases we've had in the recent past, especially a lot of these lending apps, which unfortunately also use the fintech or the tech in the fin part of it to actually do a lot of, not so nice things, right, to customers. And I think I think we should somehow try and make sure that as an industry that we have certain guidelines that we define for ourselves. I think maybe a fintech kind, like there's a NASCOM equivalent, maybe we should have some kind of a fintech equivalent that we can all get together and form certain, I think, guidelines that we all abide to, right? Because I think when customers start having bad experiences, that just leads to, I think, this negative feeling about whether I can trust this fintech, whether it makes sense for me to work with this company in terms of either the neo banking service they offer and it's all because they've just had a bad experience dealing with some people who have not been too transparent. So I think what I would hope for in the future is that we could form some kind of a self-governing body amongst ourselves where we define certain, I would say, rules of the land. It's not formally obviously regulated, but something that we just have as a code of conduct amongst us as fintech. So I think that would be something interesting that we could do going forward.
Code of conduct definitely is required. Vipul?
Yeah. No, so look, I think that piece whether fintech is what is fintech and all that stuff, all that is all gone away now, right? I think there is also this whole thing a couple of years back whether it's banks versus fintechs. All that is also gone away now, right? It's a BFSI, sort of a traditional BFSI working together with the with the fintechs that is really making a difference, and that's visible in almost every space, including UPI, where there's public infrastructure, there's banks, and then there's Google Pay and Phone Pay and all that stuff, right? So that is actually working really well at scale. So I think those challenges are not there. I think on the regulatory side, RBI recently introduced a fintech department, right? And started sort of interacting with that, right? IMI has, for example, a new banking council. Where we are, for example, getting in front of, Niti Aayog, RBI, and so on and so forth. And like Mukund was saying, there are, SROs. So for example, I'm on, on FACE, which is a FinTech Association for Customer Empowerment, which is a very big file to become an SRO. So I think those things are absolutely relevant. And there have been sort of these loan apps which have been discriminatory and so on and so forth. A lot of them have come on the radar. Those should 100% get stopped. Regulator in India has been honestly very very pragmatic and very forward thinking, always, and it has always helped, right? And I think that will continue as we go along. And it's always been about customer protection and national interest, right? So those two go hand in hand. I think that they will continue doing that. So we, for example, a checkbook, we actually embrace, regulation. We have a subsidiary which is IRD regulated, and so on and so forth. So I think from that point of view, it's always helped us. So I think those will keep going down as concerns, because you will have more and more involvement from regulatory authorities with fintechs, and that's largely because that whole question of which side is fintech on, who is it against, etc., has gone away now, with the realization that all of this, the BFSI and the fintech industry is actually helping consumers. So that is aligned with the regulatory thought process of helping consumers. So I think that is how I see it evolving. So I don't think we have any sort of roadblocks on the way, but more of coordination and involvement from everybody, right? And I think Mukund, we'll chat separately, about some of these initiatives. I think you should definitely be there in some of those.
Yeah, would love to, Vipul. Looking forward to it.
All right, I think we have had an awesome discussion. Great points. I'm just moving towards the closure, and I just wanted to give my 2 cents on the entire discussion that we have had today. I think the discussion has made it really evident that India, with its very diversified population, makes it actually a hotspot for fintech startups to flourish. However, the constantly changing regulations and the underbanked areas of India actually pose a major challenge to the country's financial landscape. The only way to overcome these challenges, in my opinion, is by increasing awareness amongst the Indian audience, and of course through collaboration between various fintech organizations and traditional banking and insurance sectors. Fintechs, financial institutions, regulators, and government, everyone needs to come together in order to ensure sustained growth of the entire fintech industry in India. Right, on that note, thank you so much, Vipul Sharma, Mukund Rao, Satvik, and Dev for joining us today for this very special episode, Building for the Future.